this is exactly where you get an opportunity for a nice short here and then continuing basically with a downtrend. And then sure enough, this is exactly the best place to buy the dip and go long from there. So for this particular trade, I would use a risk reward ratio of around maybe 3.37, which I think is pretty good. This is where we get the pullback to the high volume node. This is where you would enter. From there, it goes to our take profit right here. To show you the risk reward ratio on this particular trade, it would have been 4.37, and then we get a significant pullback right here. And this would be an area to get long and take it back to this high volume node right here. Today I'm going to be talking about volume profile and how to make high probability trades with it. So first things first, what is volume profile? Essentially, it's a histogram that shows how much volume was traded at every specific price point. All of these clusters, they're called volume nodes. The size of the node depends on how much volume was traded at that exact price. You have high volume nodes right here. You have low volume nodes right here. Again, this is a high volume node. This is a low volume node. As you can see, there is not much volume. You go to TradingView and you type in PVP, which stands for periodic volume profile. You go to settings. Here you can choose what period you want to use volume profile for. It could be days, could be hours, minutes, could be a bar. If you choose this, your volume profile is going to be the same time frame as your candles. You will see that each and every candle is a separate volume profile on its own, showing where the majority of volume was traded. So you can see we had a lot of volume here, some volume here, lots of volume in here. On this long candle, you would see that a lot of volume was traded in the bottom. Let's say you choose days, you can also do it for over 3 days. You can say 10 days, then you can also do weeks, you can do months. And then once you do that, you need to play with row sizes. More rows you add, number of rows, the more detailed it's going to be. It's going to be sort of more granular. And then if I, let's say 100, it's going to be more bulky and less granular, just like so. Choose whatever works better for you. One thing regarding TradingView that I want to mention is that TradingView doesn't use exact volume data, rather it uses an approximation. So it uses something called tick volume. It's not going to be precise. It's not the best platform for order flow trading if that's what you're into, but for simple trades with volume profile, I find that it works just fine. Also, I see some people using in volume function up and down and then even delta. Again, given the previous limitation that I just mentioned, it doesn't make much sense to do that. So I would just advise to keep it in total. And then all this coloring red and blue, and they choose like different colors for down volume. Same with the value area up and value area down. It's just not going to be very accurate, so there is no point. I would just keep it to total volume, and it's going to be much better for approximation. So here it's just same colors, or you don't have to bother even changing it to the same color because it's going to be the same color anyway. I would tick off the values as well. If you have values on, supposedly it's going to show you the precise number of contracts that's being traded at each price point. But again, given that it's an approximate volume, it's just not going to make much sense or use. So why is it turned on for some people? No idea. Next thing is you can choose what's going to be the width. So I use 50. Let's say we do 70 instead. And this is how it's going to look. And then let's say you do 30, and then it's less invasive with your candlesticks. Also, you can choose if you want it on the left side or on the right chart. So right now I have the daily profile. Since I'm using the extended trading hours, my day starts around 3 p.m. PST. And if I want to see the volume profile on the right side, just change it like so, and this is the volume profile for Thursday. Coming back to the precision issue, also doesn't make sense to use value area at all. That's why it has the same color. Histogram box, you can choose to use certain color for that, and by increasing opacity, you have an idea of when the period starts and when it ends, if that helps you. I personally don't use it. And then a lot of order flow traders, what they do, the order flow traders essentially, they use value area high, value area low, and a point of control. The thing is with that, it gives you a lot of levels on top of the other levels that you might already have. And once you have these, I don't recommend using the developing point of control or using the developing value area. Also, it's important to note that they usually do not do this on TradingView for the reasons I already discussed.
And then to summarize the way they trade, of course, it's a little bit more nuanced than that, but once the volume profile develops a little bit for the day, you want to fade any kind of breakouts or breakdowns below the value area low and above the value area high. And then value area is where the majority of volume was traded. So in this case, we set it to 68, and then value area high is just the upper edge and value area low is the lower edge. Point of control is a specific price point at which the highest volume was traded for that period of time. Some people also extend point of control, and then if it comes from, let's say, previous month of February and we're in March, they use that as a support and resistance as well. And then there is this thing called naked point of control, which essentially means that if the point of control has never been tested, it's called naked. So this is an example of the naked point of control, because once we pass the month of June, it has never been tested since. And then supposedly if we ever do come down to this naked point of control, it's going to be a good area to use as a strong support in the future. Back to value area high and value area lows in the point of control. Once the price comes to the previous value area high from our previous volume profile from the last month, you would be fading anything above it and then shorting it, and your take profit would be, let's say, previous point of control, or alternatively it would be previous value area low. And then here, as you can see, once the price leaves the previous value area low, a lot of order flow traders also use that for an entry for a short.
Once the price is inside the value area, it usually tends to be a little bit more choppy and it tends to range. This is more of an exception. And then using the value area low from the previous day, since it's basically a support in this case, you would wait until it comes back down to value area low and then long from there, taking it to either previous point of control or value area high or any other level you're looking at. And also, once the price is accepted above the value area high, then they would use this as a support and long from there. Similarly, is once the price is accepted below the value area low, that would be your place for a short. Points of control are usually not viewed as very good entry points. The price action around points of control tends to be very choppy. Inside the current daily volume profile, it is better to use point of control as a take profit point. Now, I'm not saying that this is the incorrect way to trade, or it's bad, or it's not profitable. What I'm saying though, that TradingView is not the best platform for this kind of trading. For this, you should be looking at Sierra Charts, Motive Wave, Quant Tower, or any other platform that's actually good for order flow. But if you're like me and you like TradingView and you want to keep all of your charting on this platform, then I can show you a simple way of trading where the TradingView's data in precision is not going to bother you too much. One thing that I forgot to mention, that if you're still adamant about trading this way and you're choosing TradingView, then you can also go to inputs and you can extend the point of control right, extend value area high right, and then extend the value area low right as well. And then probably for you, then it's going to make sense to color the value area either a darker color or a lighter color, up to you. And this is what you're going to end up with. In my opinion, it's making the chart look a little bit over cluttered. But if you're into this kind of visuals, then I guess that's fine.
And now back to explaining the simple way I trade volume profile. So we have high volume nodes, as I already described. We have low volume nodes right here. So that's going to be your low volume node, LVN. And this is going to be a high volume node, HVN. And then you have high volume node here. You have low volume node here. Another high volume node here. Essentially a low volume here. And then the simple way of explaining it and using it is that price tends to stagger at high volume nodes and it tends to be drawn to these. And then for the low volume nodes, the price tends to just quickly rush through low volume nodes without spending much time in there. And there is essentially nothing holding it in low volume node. The price just wants to close the gaps. The price goes from one high volume node to the other high volume node while skipping the low volume nodes in the process. And high volume nodes act as magnets. They're attracting the price. The price is always attracted to high volume nodes. So a simple way of trading it, I am aware of where low volume nodes are, but I don't mark them on my charts. What I do mark, however, with this kind of boxes of the same color of the volume profile that I chose, I mark the high volume nodes to be aware the price is most likely going to be attracted to, where the price is going to go. One thing that I wanted to add is I rarely trade based off the current or developing profile. So let's say we were back in November, I wouldn't be using this monthly volume profile for November for taking trades or making trading decisions. I would probably be more interested in the monthly volume profile back from October, or I would be using the weekly profiles from the previous week. So I don't use the current or developing volume profile as much. Sometimes I look at it, but I prefer using the previous volume profiles, whether I'm trading the weekly volume profiles or the monthly or daily. So once the price is inside a high volume node, it usually ranges until it breaks either above or below, and then it fills the low volume nodes. And then once price reaches the high volume node, it's usually rejected. So I'm going to use a replay function to showcase how I would be trading this scenario. In this case, I would mark this high volume node from the previous week's volume profile, and this would be essentially the zone that I would be using as support and resistance. And until we firmly close above it and establish that we gained this level, I would still be fading it. And what happens is I would enter a short anywhere here based on price action. And as you can see, the price was eventually rejected from this level, and that was a nice shorting opportunity. You could have entered even here, depends on how long you hold your trades for and what time frame you trade on. So the gist of it is that I mark high volume nodes and then I use them as dynamic support and resistance. One thing that's important to know, for example, with this, and then after this trade right here, once trading in the weeks to follow after this one, I would move the high volume node to now this area. And now this is our high volume node. And then next week, we do not come close to it. But then the week after, we go right into it. And then sure enough, again, given that there is a lot of volume here, the price cannot break through and we get a nice reversal down. You can use this on all time frames. You can use it on 15 minutes, on 1 minute, you can use it on seconds, and then with the volume profile itself, you can also go down. For example, I use for weekly or monthly, I use the 1 hour time frame. For daily, I would go to 15 minutes, and then you can also do hours. If you want to do minutes, or 5 minutes or 3 minutes or whatever time frame you want to use. And then for a higher time frame, you can also do, it doesn't have an annual volume profile, but what I do is I just use the 12 month, and that's essentially your annual. And then the time frame I would be using for those higher time frame trades, if you were into high time frame trades, if you were a position trader, if you're a long-term swing trader, then I would be using either monthly candles, or maybe instead for the annual volume profile, I would be using weekly candles.
The other thing that I wanted to mention is that you can use volume profile for ETFs, for stocks, for futures, for crypto. Regarding crypto, I would recommend either looking at Coinbase or Binance or Bybit. First example is a replay of a Tesla move from November 2025, and this is on an hourly time frame with a weekly volume profile. And right away I can see a huge volume node right here from the previous week, and then I'm gonna mark that as a potential resistance zone and look into fading a move from here. And then as you can see, what happens is sure enough the price comes here into this high volume node, and then drops much lower. So in this specific scenario, you would wait for the price to come to high volume node where it's usually accepted. I think high volume nodes usually are great for entry points, and also they're great for take profits. I would only warn you about being careful with using high volume nodes as entries instead of taking profit, because sometimes once the price is back to the high volume node, it can chop a little bit. So for this particular trade, I would use a risk reward ratio of around maybe 3.37, which I think is pretty good. The highest volume was traded at this specific price level, so I'm interested in entering here. And then I put my stop right here, which means that we have exited the high volume node, we fill this little gap, the little low volume node right here, and then this is where I would exit because my trade idea would be invalidated. So this is exactly where I put my stop loss. And then I just take it here to the first hourly level. Obviously, if you are more risky, you could try to go for this level if you were a swing trader, which proved out to be a better trade. And here's the trade without seeing the volume profile, which maybe would not be as obvious. But with seeing high volume node, I can easily identify that this is an area of interest, that this is where I do want to trade a potential reversal. And then another example of a weekly volume profile on an hourly time frame would be seeing this huge high volume node and then just marking it as a potential area of interest. And the idea is that once the price is accepted into a high volume node, it usually ranges a lot, but once it's accepted above, it usually comes back for a test, and that's the opportunity to get long. And let's replay. And sure enough, this is exactly what happens. Get an opportunity to enter right here, and essentially once the price is above the high volume node, it comes back. This is an opportunity to get long, and then it bounces up from there. And for this particular trade, I would be entering right at the upper edge of the high volume node, and my stop loss would be just below the lower edge of the high volume node. And then this gives me a risk reward ratio of 2.26, and I would be taking profit somewhere here around this hourly level. So as you can see, I don't necessarily use only volume profile for entries and take profits. Sometimes I would use volume profile for an entry, and then I would use price action and support and resistance levels on candles for my take profit, just like right here. And then last example for Tesla for hourly time frame with weekly volume profile would be seeing this high volume node, marking it as a potential support if the price comes back to it. And essentially what I'm looking for is any move here should be bought, should be long, and then take it here. And I wouldn't take it this far up. I maybe would have taken profit earlier, somewhere around here, since this is another high volume node. So essentially the gist of it is to wait for the price to come here and then long here, and this is where I would take profit. Let's replay and see what happens. All right, so price went in, time to get long right here. And then we would have been taking profit here, right at this level. And the way I would structure this trade is I would enter right here at this sort of high volume node of the high volume node, right here. And then my stop loss would be at just a little bit below or right at the lower edge of the high volume node. And this is a 2.46 risk reward ratio, so a pretty good trade. And then this example is for the lower time frame traders looking at 5-minute candles on Apple with a daily volume profile. Right away, I can see a huge high volume node right here. This is going to be the upper edge. This is going to be the lower edge, more or less. And then the whole idea is that if the price gets above the high volume node, then once or if it comes back down, this is the place to get long and then take it to the upside. And I would be looking to take a profit at around maybe this significant high right here. So we're going to mark this as take profit, and then let's see how the idea is going to play out. So far the price opened below the high volume node, so there is still no long, still no trade, just waiting for the signal. Okay, and then sure enough, the price goes here, waiting for a pullback. The pullback happens right here. This is where we get the pullback to the high volume node. This is where you would enter, right at this zone. And then from there, it goes to our take profit right here. Doesn't matter that it goes higher here. We're just taking profit here at this significant high at this week. And I don't care that the price goes even higher after that. This is a different trade for me. My initial idea was to wait for a pullback to this high volume node and then get long and take it to this level, and that's exactly what happened. And then to show you the risk reward ratio in this particular trade, it would have been 4.37. I would have entered at this volume node right here. So it's like a volume node within the high volume node. So this first significant one, this would be my entry right here, and then my stop loss would be right below the high volume node. Whole trade would have lasted for less than an hour. And then another example for Apple on a 5-minute time frame with a daily volume profile. Right away I see this high volume node, so I mark it as a potential support. And then the idea is that if on the next day we do get above it, and then we get a significant pullback right here, this would be an area to get long and take it back to this high volume node right here. So let's see how it plays out. All right, so far we're below the high volume node. Let's wait for an acceptance above and then a pullback to get long. And right here we get an acceptance above the high volume node, and then this is the pullback. For this trade right here, the risk reward ratio would be 2.83. Stop loss would be just a little bit below the high volume node, and then entry as always is somewhere inside the high volume node, maybe around this high volume node within the high volume node, and then take profit according to the other high volume node, which is exactly what we get right here. All right, and then another low time frame example on Apple on a 5-minute time frame with a daily volume profile would be seeing this high volume node right here, marking it as a potential resistance, and in case the price comes here, using this as an entry for a short and taking it back to this support level right here from which the move would originate. All right, so the price came here to this high volume node, so this is an opportunity for a fade. This is an opportunity to get short right here. And then this is our take profit right here. So how I would structure this trade is enter somewhere within the high volume node, obviously looking for the point with the highest volume for a potential good entry, and then stop loss would be just a little bit above the high volume node, and then this gives us a risk reward ratio of 3.31 with a take profit at this local support level right here. And then an example of a high time frame trade would be ETH/USDT on Binance, looking at the daily time frame. But since TradingView doesn't show volume profiles in a replay mode on daily time frame or higher, I use 24-hour candlesticks. This is my workaround. And then right away I see this high volume node. I mark it as a potential demand zone in the future. And the play is, once the price is above it, if I'm looking to get long, if I'm looking to buy ETH for a high time frame trade, I'm going to be looking for any kind of pullbacks into this area right here, or the whole high volume node, and then from there take it. And personally for me, I would be targeting this daily resistance right here. So I would be taking profit right here, but it's up to you where you would be taking profit. Depends on your preferred risk reward ratio, whether it's 2, 3, 4, 5, or whatever you use. Now let's replay and see how it goes. And sure enough, we get an opportunity to buy right here when it comes back to the high volume node, and then it gives an opportunity to also take profit right here at this daily resistance. So this is the take profit. And then it goes higher, but it's up to you where you want to take profit. I'm just showing how to use volume profile to get good entries, to see where you want to get long if you were waiting on a pullback. And then for another high time frame trade on BTC USDT, I wanted to also talk a little bit about visible range volume profile, which you can find in TradingView indicators by just typing VRVP, and it has pretty much the same settings as the periodic volume profile right here. So how visible range volume profile works, it's basically showing you the volume profile for everything that can be seen in the charts. So if I move a little bit to the left, that's going to change the shape of the volume profile. And then if I move a little bit to the right, it's going to show me the volume profile for this price action that I can see right here. So it's showing you essentially the visible range that you're working with. Let's say you were a long-term investor in Bitcoin, you're a big believer or whatever, and you're looking for a good place to buy for your long-term spot bags. What you could do is turn on the visible range volume profile and then try to see where you want to buy. And right away, you can see that there is a huge low volume node right here. So this is where the price would move swiftly, going to another high volume node. So you do not want to buy here. This is a gap that usually gets filled sooner or later. Again, low volume nodes don't have to fill all the time. They could be filled months later, weeks later. But if you see the price kind of chopping around here at the edge of this high volume node right here, then sooner or later you can expect that you could be buying at any place around here. This basically tells me that instead of buying Bitcoin at 89,000, there's a good chance that it fills this gap, and I could get a chance to buy it anywhere between 57,000 to say 69,000. And then me personally, inside of the big volume node, I like to look at these clusters as potential entries. So I'd be looking to buy maybe around 63,000 or so. All right, so let me mark the area that I'm looking for right here. And then using the replay function, you can see that buying Bitcoin here was a much better deal than buying it up here. It's easy to see that this is going to get filled sooner or later, and the price has no support here, and it's just going to move from one high volume node to another high volume node. I understand that the limitation is that this is a very wide price range, but again, this is a higher time frame trade. You use this as a general guidance, and then based on the price action, support resistance levels, or any other indicators you're using in confluence with this, you get an idea of what range is the best for buying if you're interested in buying this asset for your long-term bags. And then apart from periodic volume profile and visual range volume profile, you also have in the drawing tools and TradingView fixed range volume profile and anchored volume profile. Now I don't care much for anchored one because visual range volume profile does better job at this and it pretty much does the same thing. But what I do use sometimes is fixed range volume profile, and it's essentially very similar to the anchored VWAP that I discussed in my previous video. You basically choose a swing high or swing low for a certain period, and then you extend it all the way throughout the downtrend move, or if you're choosing the upside move, then the upside move. And then this way I can see, for example, here with the bounce, how high can we go, when it's going to be the point where it's going to be rejected. And sure enough, the highest volume node is right here. See, is it sticking out? And this is exactly where you get an opportunity for a nice short here, and then continuing basically with a downtrend. Same thing with the upside move. Once the dip starts and I want to know when is it that I can start buying the dip, I can see that once we lose this high volume node, the only one that's out there that's visible is this one. Can you see it's more or less prominent, the edge right here. And then sure enough, this is exactly the best place to buy the dip and go long from there. My final thoughts on volume profile is that it's an excellent indicator. It's not going to magically increase your win rate. It's not going to change your trading. It's not going to take it from 0 to 100, but it's definitely going to help you identifying those key levels, those key sort of resistance and support levels right here, the high volume nodes, understanding if there is a low volume node right here, then the price is likely to move to the next high volume node right here, from one high volume node to another high volume node in the process, just filling the gap right here. So to sum up, the price moves usually from one high volume node to another high volume node, pretty much ignoring the low volume nodes in the process. And then what I do personally is I mark these high volume nodes for the future, and then I use them in conjunction with my regular support and resistance levels. An important remark should be made that I still do give preference to regular support and resistance levels. And then the way I use volume profile, I'm basically checking my levels to see if I make any mistakes or anything. Volume profile is not going to lie, it's going to pick up and show me where the high volume nodes are. So what's to expect from this channel? I think next video is going to be on moving averages. I'm going to try to upload it sometime in the next 3 or 4 days, so be on the lookout for that. In the meantime, you can check out my VWAP video. I added the link in the comment and in the description, and then my other video where I'm ranking trading indicators and telling you what I think are the best indicators to use. Thank you very much for your attention and have a great day.